Move again to our management interactions, and this we are talking about is DCB Bank, who has posted good set of numbers. Profit has jumped almost 22%. We're also looking at good asset quality, which has improved in Q3. The bank maintains FY27 growth outlook as well, and ROE guidance reaffirmed at 13.5%. We're also joined by Mr. Praveen Kutty, who is the Managing Director and CEO DCB Bank. Hi, morning, Mr. Kutty, and welcome to the show. Let's talk about the NIMs first. NIM improved sequentially despite a decline in asset yields. How sustainable is the current 3.27 NIM once the full impact of repo cuts, flows through the asset repricing, sir?
Yeah, thank you for having me here. On the NIM, I think we have seen the worst. The nadir was in Q2. Q3 has improved. And we are seeing increased traction on the deposit side. We've grown 19.5% YOY on the deposit side, and at the same time reduced the cost of deposits by 10 bips. Most of the deposits that we have in the bank are long tenor, so we're sanguine about seeing benefits of this coming through deep into the next financial year as well. So that should continue.
Right. Hi, Mr. Kutty. This is Ankita also joining in. Now, with the BL mix rising and borrowings reducing, what is the steady state NIM range you are targeting for FY27?
See, we are looking at somewhere between 350 to 365 basis points pre the rate cut. For example, the last year, that's what our guidance was. I expect us to touch 350 by the last quarter of next year. So that will be a momentum which we'll be seeing happening, unless there are any further rate cuts happening.
All right. Let's talk about slippages. Now, slippages ratio is at a multi-quarter low. Now, is this reflective of structural underwriting improvement or near-term benign cycle?
I think it's a combination of two. We kind of tightened up the belt on the underwriting. The worst of the MFI headwinds are over. Plus, we are seeing possibly the benefits of the GST rationalization. Their domestic demand is picking up. We're seeing the benefit of it in repayment coming through. And it's a series of things that we are seeing which augurs well for the future. One is the bounce ratios have come down. Slippages are at a historical low. GNPA is come down, in steps consistently over the last 6-7 quarters. Our NNPA at 1.1% is again at a 3.5 year low. So with the new vintage sourcing showing reasonably good resilience, we expect that to continue in the future also. In fact, we are looking for a net NPA reduction to 1% or less for the bank in the very, very short future.
Right. Also, the loan and the deposit growth guidance of 18 to 20% has been reaffirmed. Which segments are likely to drive the incremental growth in FY27, Mr. Kutty?
We've always been on the secured granular lending. So retail is a big proportion of the kind of loans that we do. So I would tend to think that mortgages will continue to grow at a pace slightly higher than the bank's overall asset growth. Within that, we see business loans taking off. It's been a 1.5 year journey where we have changed the mix from a 50-50 of home loan and business loan to a much higher business loan. And that's getting us the benefits in terms of better NIM and also better quality, better portfolio quality. We would continue that skew. So secured assets clearly is the way we grow. We have slightly upped the ticket size, and that also is giving us some incremental benefit. So what you see is multiple incremental steps helping us in the growth as well as in the quality of the portfolio over the last 6-7 quarters. The future, we would see similar kind of growth trends. The only thing is that co-lending would, at the end of the year, would be below 15% of our total assets. Currently, it's at 16%. Last quarter to 16.22. It'll come down to 15%. That's the guidance I've given, and we'll be sticking to that.
All right, Mr. Kutty, I think that will be all. Thank you so much for joining in today with ET Now and helping us decode the numbers. Thank you so much. All right,
Thank you very much.
With that, it's time for a short break, but then post that, once again, we'll be resuming your stock-specific query session with Kunal and Rajesh. Stay tuned.